And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at the charts across indexes, commodities, individual companies, companies reporting earnings, anything that's grabbing our attention, pretty much anything relevant and interesting that we think is moving financial markets that day. Break it down, give you guys some analysis so you can better run your daily routine. And welcome back to our program here. Last day of a back and forth and volatile week, especially post-Fed. Light news and light volatility early in the week before the Fed. Now we've had some price action that's obviously out there. We'll break it all down. I got Coach Frank here to join us as always on a Friday. How you doing today, sir?
Doing well. Thank you. Always a pleasure to be here. Yeah, isn't it funny? We complain last week and early this week, there's no volatility in the market. Then we get a few days of volatility in the market and complain that why is the market got to be so volatile? It's funny how we operate as traders, but doing well and happy to be here with the team as usual. Hope everybody had a nice week, both in and out of the markets.
You know, it's a really, really good point because everybody says they want volatility. They want to pull back until they get it. And veterans know that because we've been through this before.
I say it a lot.
We want
I'm as guilty as anybody, I think.
Yeah. It's funny how that works. We got Coach Cody and Coach Matt as well today. Cody, how you doing today, sir?
I'm doing well. It took me a second to switch my mic over to the correct one so I don't feel like I'm in a bubble or sound like I'm in a bubble at least. So hopefully my headset sounds a little bit better.
And Maddie, I was just doing intros. If you can go back to that Trading Labs page for 1 second, I'd appreciate that. That's my bad. We were sitting here talking pleasantries, and Frank was even making the old opinion of people always say they want to pull back in volatility until they get it. And that is the truth. Matt, how you doing today on a Friday, sir?
I'm doing absolutely fantastic. Excited to be here with the crew, and it's always a good thing. It's Friday Fun Day. We get Coach Frank here. Cody's joining us as well. We get to talk a little bit about sectors as we lead into the scatter report meeting later today. So This is kind of the beginning of a very long Friday for us to tackle trading, but it's more fun than anything because we get to hang out with a bunch of cool traders.
It's a fun Friday for sure.
It's my Friday fun.
It's long. But it's fun. I always look forward to Fridays. Are you kidding me? I even try to go to bed early on Thursday so I well rested on Friday.
Well, you got to get well rested for those sidebar conversations we like to have.
That is true. There are some. We take some detours.
Yeah, we do take detours. But no, I'm doing good, Tim. I'm excited to be here.
And one real quick thing before we get into the analysis, we got a lot to unpack, so we're going to get there pretty quick. But I do want to mention again, through the week, we've been promoting this new thing we're doing called the Trading Labs. And, you know, guys out there, if you're team tackle, Trading Labs enrollment starts on Monday. We'll be dropping these pages so that you can go and join either one of the teams or all three of the teams that are going to be a part of the Trading Labs. Each day in the Tackle Today email and blog this week, Coach Mark, Coach Emily, and Coach Tyler have been writing about their teams around Trading Labs, giving you guys some kind of perspective and insight into how they're going to be running them. We also did a podcast on Monday. If you've not listened to Trading Justice episode number 429, I would definitely go and check that out. And we have Coach Tyler, Emily, and Mark on there to discuss Trading Labs as well. So get excited, get ready. We're going to have much more information on Monday on how you can take this step forward. Enrollments in the labs start next week, and then the labs will start the week after that. Matt, I'm very excited about this, and can't wait for Monday, quite frankly.
Me too. I'm excited about Trading Labs, and I'm excited for the people that will have access to these amazing teams, and I'm most excited about where these teams go in a month from now, 3 months from now, 6 months from now, and like I said on Monday, it's the communication that traders have with one another that is very important, and the speed of that communication. And so even though in Trading Labs, we're going to be doing it the same way we've done a lot of things. We do a weekly webinar, but again, it's the communication, the support that these teams will have on an ongoing basis, and I think that's exciting.
I'm excited about it as well. So be ready for Monday, guys. All right, let's get into the markets, though. We've got a lot to unpack here on a Friday. And, obviously some volatility, especially around the cyclical areas of the market. Matt, there's a lot of hot takes out there right now that are going on. But I'm going to focus mostly on the technicals, the price response, and what's actually going down right now and adjust accordingly. How are you reading the S&P here, Matt, as we're down about, a percent or so on the S&P?
Yeah, we're obviously, ever since the Fed spoke spoke on Wednesday, you're seeing the unwinding of certain things that have been fairly consistently bullish over the course of the last 8 months. And, we're talking about the cyclical areas of the market specifically. And so, but when you're looking at the broad market, and that's where I want to start here before we get into kind of what the rotation we're seeing from a sector perspective is. But when you're looking at the broad market, obviously it was asleep, riding that 9 EMA for quite some time. The Fed was that environment that woke up the market, guys. We were talking about that over the last couple of weeks. Can it be the labor market numbers? Can it be the CPI numbers? Can it be the central bank numbers? Could it be Europe? Could it be Japan? Well, it was the central bank that that woke up the market out of the slumber. But what really kind of woke up was that cyclical and the unwinding of that cyclical trade. And so when you're looking at this from a specific sector perspective, because I think that's where the story is really being told, not from a broad market. You have a little bit of a downward drift here. You're fighting some support right there at the 50-day moving average, very similar to what we saw over here, double dip over there. So you're fighting against that very similar support level. But the story is really in the sub-market. It's really in the sectors. And it's not a story that is just simply being told this week. When you're talking about traditional rotation models, these things take time, and they take time to unwind. And yes, the central bank played a big role in the unwinding of the cyclical trade over the course of the last few days. But over the last few weeks, what have we been seeing at tackle trading? We've been seeing those cyclical areas of the market get downgraded. 5 points here, 5 points there, and this week you'll see another fairly substantial downgrade. What have you been seeing on the other side? Technology, communications, discretionary, healthcare start to be a little bit more upgraded coming into it. So the story that the market is telling the last 2 days, the central bank exasperated that story, but it is a story that started a few weeks ago. So when you're looking at this from a sector perspective, remember to tackle, not only a tackle, but we really kind of look at 11 sectors out there. You have traditional aggressive sectors, you have traditional defensive sectors. How I like to look at it though at tackle is I like to look at 3 segments of sectors. You have your cyclical areas, that would be industrial, that would be basic material, that would be energy, and that would be finance. You have those 4 sectors that you would categorize as cyclical by nature. Then your next one is your growth-based sectors. And again, there's a combination of all this in every sectors, but I'm just talking broad market perspective. Then you have your 3 sectors that fit up kind of those growth areas. That would be discretionary, which held up fairly decently this week. Let's go to technology, XLK. Not only held up, but showing some strength this week. And you have communications, which is showing a little bit of weakness at the top, but certainly performing better than the cyclical areas of the market and outperforming the broad market itself. So you have your growth areas of the market. Then you have your traditional defensive areas of the market, and that would be consumer staples, utilities, real estate, and healthcare. And so when you're looking at this, and the only thing I've been reading the last 2 days is the unwinding of the reflationary trade. And the reason I feel like the market is really focused on the unwinding of the reflationary trade is what is happening in commodities. But what is happening in commodities is different than the rotation we're seeing in sectors. And so when you're seeing reports out there, the unwinding of the reflationary trade, that a lot of that is particular to the commodity market, but it's not just the central bank and interest rates. Remember, there's other things that are transpiring this week and over time that's impacting the commodity market. China news this week. We're going to increase supply of precious metals to our suppliers. That's having an impact on that. So I think we're combining a little bit of what's happening in the sectors and associating that with what is also happening in the commodities. But I do think there's a little bit of a difference in that analysis. From a sector perspective, all I'm seeing here is traditional sector rotation. That's what I'm seeing. I'm seeing money flow out of cyclical areas of the market. And where is it finding a home? It's finding a home a little bit in those growth-based areas, a little bit in the defensive areas. But what it's not doing is just coming out of the market itself the same way it's coming out of commodities. Right now in commodities, it's just coming out.
Yeah.
It's just like, let's just get out, right?
We're out.
That's not what's happening in the sectors. You're seeing rotation. And so for me, I get it. Like we're in the low of the summer, CNBC, market watch, seeking alpha. I get it. But I don't think what you're seeing is the unwinding of the reflationary trade, because I don't believe we cured inflation this week. I think what you're seeing is money flow out of cyclical areas that have been extremely strong, maybe a little profit taking there, unwinding and rolling back into the aggressive growth areas of the market. I see, again, the anatomy of the bull market. What do I always say when we see rotation? Well, what does Tyler say?
That's the anatomy of a bull market.
That's the anatomy of a bull market, right? Money rotates. It doesn't mass sell. And so I see this more as traditional sector rotation, low of the summer. We have a lot of hot takes in the market right now, but really what I'm seeing is sector rotation.
Frankie, what about you? How are you reading the price action this week? Obviously, talking about the broad S&P 500 that has all the balance of the sectors in it. It's got a little pullback into the moving averages. You got much deeper corrections, obviously, in some of those cyclical areas like Matt talked about. And I'm sure he'll go through the sector charts here in just a second.
Yeah, we'll take a look at them technically. I just wanted to talk broad-based for a second.
And I want to get Frank's take on that. What about your broad-based read on this here, Frank?
Yeah, I mean, overall, Maddie said it really, really nice. I would 100% agree with his take there. The only thing I would add, just from a purely technical point of view, when we're talking about the market, broadly speaking, because I agree with where Maddie is right now. But one thing when I look at the S&P is I see us testing this 50. I see us testing this old support level, this one-day pullback, right, that we had back at the very beginning of June. Mm-hmm. Below this area, and I believe, and that's some old resistance too, this is a legitimate price zone. I think around the 41.50 to 70, 80 range. I'm not going to give it an exact number because I think that's a fool's errand. But if that gives out, we really kind of have, what Mark would call a moving average pocket, right? Because we, below the 50, there's really nothing for a while. Before the 20, it actually lines up pretty nicely with those old lows from back in May. So while I think it's getting way ahead of myself thinking that that's what it's going to do, that's not what I'm thinking right now. I am thinking about if we do take out this support level, we didn't really have a great chance to build some support. And there is a little bit of pocket where it might be, maybe that doesn't mean you're broadly going bearish. I doubt that's what it'll mean for me if that's what happens. But
yeah, I agree with that, Frankie.
Throw another caution flag to me. But, Matt, you said it, I say it a lot, in the summertime, you see a lot of back and forth, right? It can be a little bit of a frustrating.
You see some weird price action in the summer sometimes.
You do. And so, I'm going to be watching this area and how we, from a broad market perspective, I do think we, really focus on sectors. I think we, generally that's the approach that we take. But I am interested in how this battle plays out, because the one thing that, I do see if this battle loses is there's a pocket where there's potentially new support that gets built before we get all the way down there, right? But there really isn't any built that I'm seeing, at least right now. So there's a little bit more room to the downside if we can't win this battle from a broad perspective. I'm really interested to see if we continue to see the money move into the new and exciting sectors, how that impacts this.
And can I also add to that, Frankie, because I don't think anybody loves this market right now outside of your cash flow traders. I'm talking directional traders, right? Cash flow traders will always come in and be like, so?
Yeah.
Right. I mean, that's what they always do.
If the market doesn't crash, cash flow traders are
like
happy.
Literally outside of like market corrections. They're like, okay, so what? Write some covered calls. Stop complaining. What are we doing?
Yeah.
But to the directional traders like myself out there and like Coach Frank, nobody loves this market. Nobody loves markets when they're in the middle of rotation because it gets a little confusing. The technicals get a little whack. And regarding the market here, yeah, Frankie, I agree with you that you're finding some fairly decent support right there around the 4150 by 4160 level, right? Mm-hmm. And that's right. That coincides right where that 50-day moving average is. But if you violate that, it's like the straw that broke the camel's back. There's nothing there to stop it from getting down to the 40-50 area. And that's a broad-based sell-off in the entire market. So it's something we have to be concerned about. Because, again, like you said, Frank, This slow drift, it didn't create a lot of support. And so when you're now dropping here, there's nothing really to stop that from 40.50. And that could get a little hairy in the short term. And so you got to be looking at that. And I do agree with you, Frankie, that if you continue to see the sell off, it could get a little hairy down here as it gets into that next support level. Something to certainly be concerned about. And it does look like the S&P will get a downgrade because of that, because of the increasing volatility. Obviously, post Fed discussion on Wednesday, it will look like the S&P will get a downgrade. But again, the sectors are what's telling the story here. Because when you look at the sectors and you take a look at, let's go to the cyclical areas of the market, that materials, industrial, finance, and energy, those areas of the market, Tim, were literally what I felt ended the theme-based trading of 2020. I felt like what we saw in November and December of last year following the election, and you started seeing the cyclical areas start to really kind of build from a strength perspective, that lasted a good 7 months. That's what's unwinding a little bit here. And so even though the S&P is looking at a slight downgrade, you're not looking at downgrading let's start with the areas of the market that you're probably not downgrading here.
Okay.
Let's take a look at technology. When you were looking at technology last week, okay, you were sent with technology last week, and I believe the ranking was right there at 20. Well, what did we see this week? A breakout followed by defense. Now, if it wasn't for the NASDAQ itself showing a little bit of increased volatility towards the top end of the channel there, I would say that technology sector looks very healthy right now from a pure technical perspective. Once again, what did we see this week? You saw a breakout followed by some volatility, no doubt, but did it ever violate support?
No,
it held. And so you could legitimately look at this as a potential upgrade, but even if it's not an upgrade, I promise you every trader is looking at that 144 handle saying if the technology sector gets above 144, it's go time.
Yeah.
That's what they're saying.
And it's a really interesting place too, because while, XLK is threatening a breakout, there are a lot of things like Microsoft, for example, doing the same, but there's a lot of, still a lot of room before we get to highs on a lot of those software type of companies. So, there's high flyers like NVIDIA, there's guys knocking on the door of all-time breakouts, but there's also a lot of reversal type of, they're a little into the reversals now. So there's a lot of really interesting chart setups I was definitely noticing in technology.
Well, and kind of like Apple here, not your major bearish downtrend W type analysis, but a nice little short-term consolidation W right there on the 200-day, a breakout. And so when you said reversal analysis, I just immediately thought Apple here because that's kind of what it's doing here. But yeah, coming back to the sector itself, you gotta like the price move. And again, it's been volatile, but it's been a volatile week. We had central bank week. It's been a fairly volatile week, but what it didn't do is violate any short-term support. It rode the 9, it held the breakout channel. And so you're looking at technology right now and you're saying, yeah, I like the price action, don't love the volatility, but again, there's context there. I like it above 144. When you're looking at discretionary, right? Discretionary and anything tied to consumers, and I've said this many times over the last few weeks, anything tied to consumers right now is just a little bit more difficult. It just is. Because when you're tied to consumers right now, you're tied to labor market numbers, you're tied to inflation, you're tied to retail sales, you're literally tied to every hot take in the market right now when you deal with consumer dependent areas of the market like staples or like discretionary. But over the course of the last week, and really over the course of the last 2 weeks, I've kind of felt like discretionary is holding up in the face of a lot of what could be perceived as negative news for the discretionary space. Discretionary itself has been tied to technology and growth for over 10 years now. And so if the areas of the market that are showing weakness would be the cyclical areas, and discretionary is tied to cyclical as well, because again, consumers are tied to everything right now. But again, we're seeing strength coming back into technology, coming back into growth. I'm just kind of waiting on that discretionary finally breaking out of that 50-day moving average. I kind of feel it's pretty simple here. As long as discretionary shows stability underneath, you're just kind of in that wait and see approach until you see a breakout here. Frankie, what would you see on this as
I would
well?
100% agree. This is a really interesting chart because there's everything that you just said, right? I mean, just traditional breakout mechanics, right? If we need to break resistance, we get the 2-for-1. If we break resistance, we break the 50, or vice versa, whichever one you want to put first. But it also would line up with the bear stop out trade. If you go back in time a month where folks were trading into that as a bearish retracement, at least potentially, they're still alive, right? They haven't hit that stop out point. I mean, they're probably complaining a little bit, but they're still alive and they still might win, right? The reason that they made the trade technically is still there for them. But if we break out, so if you're looking at it as a breakout, I'm looking at this bear stop out trade. Timmy the Bear has a stop loss there. I doubt you do, Tim, but if you were Timmy the Bear there, then all of a sudden it lines up to, well, there's really a lot of technical reasons to buy. Yeah, there's still the storylines that Maddie brought up, and I think you have to accept that, if we're going to trade in this space or this market, really. But all the good reasons to sell it from a purely technical perspective, boy, you don't have any, because I mean, you could get real crazy with this chart and come up with reason after reason as to why above that makes a lot of sense, right? We've already taken out the downtrend line. I mean, there's a lot of things. Plus, and this is always something I really like in the bear stop out trade, when it's relatively slow, because we have an opportunity to have that 9 cross back over the 20 and start moving up. Now that 20 started to move up too, so we have these short-term moving averages presenting a support zone, or at least it's a potential support catalyst. I really like this chart, Frankie, for a breakout.
Just take a look over here really quickly. Not the exact same analysis, but a very similar type technical read. Once these moving averages cross that 50 here, look at that nice little bullish movement there. You're seeing a little bit of similar and also similar increases in support. And so again, anything tied to the consumer is a little bit more difficult, but I think that gets a lot easier once you reclaim that 50-day moving average and ultimately reclaim 175. And so even though it's been choppy, I do think it gets very clean above 174 with ultimate confirmation above 175. And so keep an eye on discretionary and perhaps a little bit of a breakout potential there in discretionary. When you take a look at the last sector that we are categorizing, and again, there's some of this in every sector right now, but from a broad-based categorization perspective, would be communications. And obviously, we've seen a lot of, in Google and Facebook specifically, we've seen a lot of strength there. We haven't seen a lot of strength across the board, though, in comms. Seen a little bit of weakness. The Activision trade got blown up, right? We've seen a little bit of weakness in some of the other areas of comms. Franks, what's your read on comms here? Because I don't have the same read on comms that I do with discretionary getting clean above 174, 175, and obviously that technology play. So
yeah, I would agree with that. It's, as always, XLC is so weighted top heavy, right? So it's so dependent, and Facebook and Google have held up nicely, right? Google had that break and is now kind of testing that, giving folks a kind of a weird little Cody special if they wanted. Facebook sideways after breaking into new highs. So the strength is at the very, very top. But as you go into the beyond those
second layer,
the second layer.
Let's go into that second layer. That second layer is Disney.
Yeah, Disney.
I mean, don't get me wrong, Disney's fine long term, but who wants to touch that short term?
Not me.
Okay, let's go to Comcast, CMCSA. You know how much I love those 5-letter symbols here. Comcast, I like Comcast above 58.
Yeah, I agree. Yeah, definitely in the break, and they're definitely one of the ones that okay. But then you compare them to, say, Verizon.
Well, then my next one was Verizon, right? And so unlike some of the other sectors, you got your Google and your Facebook at the top holding up the sector, and you got maybe some Comcast action holding up the sector. But outside of that, you got a really mixed bag here in communication. So when I look at the sector itself, right, all you're seeing a little bit is a little bit of a bull flag, a little bit of a bullish retracement with a very weak breakout here at this point. So, but from an individual industry and stock perspective in this sector, a very mixed bag, So whether or not we end up downgrading or not, Frankie, I think I'll wait on the discussion for that. But I'm a little concerned here in comms, more from when you look at underneath the sector, man, you remove Google and Facebook, and you never can. They're the two biggest dogs out there, right? But if you did, it's a very, very mixed bag right now in the communication space. When you're looking at the defensive areas of the market, once again, consumer staples tied to the consumer just getting absolutely blasted right now. When you're looking at utilities, little bit of a breakout snapback. Frank, what's your read here on utilities? Staples, it's a downgrade, stay away right now.
Right now, you've got some ways to go on that chart into that 68, right? And then we'll talk when we get to that price point. Utilities is a little bit different. It was a snapback and almost the textbook definition, right, of a snapback. Broke out of that trend line. We pulled back. We're kind of hanging right at that old trend line / that old support level on XLU in that 64, 65 ballpark. If that area holds and we see some upward movement, I think I'm going to be okay with utilities. But I do think this is one of those that if we're right there, right, that support level is pretty important to me. If that breaks, I think you put these guys into that the staples.
I agree.
I would add on that chart. Matt, correct me if I'm wrong. This is one of the reasons you don't like wedges, is because when wedges try to break, they always have those previous levels of resistance to just ready to stop them out. And that's what I see in this chart, is that it tried to break out of it and just hit a previous level.
That is one of the reasons why I am not fond of triangle-based patterns, is because the way my mind works, I'm so structured to the left of the chart that I can't get away from that. And so, no, it's just not my bag. But there's some, and rightly so, that love triangle-based patterns because of the explosive nature of the potential breakout. I'm just not one of them. But there's nothing wrong with it. Yeah. Well, this is the level.
Yeah, right there. It hit 3 times.
But I also do acknowledge the fact that they can be wonderful trading environments. Just because it didn't work out on utilities doesn't mean it's not a great trade setup. It's just not my type of trade setup, because Frank.
Oh yeah, completely agree.
I mean, well, think about it, guys. Out of the up-teen technical patterns out there, we all have our likes and dislikes, right?
Sure.
Like, give me a clean high base consolidation above anything. I love that pattern. Give me a snapback 2-3 day pullback. Call it a retracement. Call it a flat. Call it a pullback. I don't care what you label, as long as it's kissing off a decent support level. I like that too. Wedge patterns, traditional bullish retracements, triangle patterns. I just don't feel they've been really successful in this market space over the course of the last year. I've seen high bases and snapbacks be very successful. I think triangles and wedges have a really mixed bag right now.
Well, I think, and I think the big thing is you gravitate towards what you do best with, right? Because you wish me the best, but you care a lot more about what you do best with than what I do.
Listen, if you love triangles, right? I'm going to cheer you on.
And I think that's part of it. And I think, when you think about triangles as a general rule, you either have to give it a wide stop or be really kind of glued to the screen, right? Moving that stop loss really, really regularly, because this happens fast, but this happens a lot, right? And like Matt said, there's plenty of times where you don't trade the triangle and you wonder what the heck's wrong with you. So I think it really comes down to the way the way that the pattern can develop, right? It's not quite as structured, like Matt said, because there's different layers. You win this fight. Yep. Congratulations. Here's another one, 40 cents away. So it's the eye of the beholder. But I will say this, Cody, and I will add this. I do like that. Hey, that's a confirmation signal to me, because people wanted to buy this, right? They wanted to buy this triangle.
Yep.
We saw that movement. So to me, as long as this support develops and holds the major support zone, I think, and it happens to be utilities right now, but this is really broad towards this pattern. I think it gives us another opportunity to get into these triangle patterns without being the first one in. So I actually do like the pullback on the triangles as long as our main support level holds, obviously.
It confirms that there's more momentum to the upside, similar to my favorite pattern, that breakout pullback on a high base.
Same philosophy.
This is just on a triangle verse, and I mean, this goes back to trade what's easy to you, trade what you know. Like, if you like a certain pattern, you know how to trade it. Trade what's easy. Don't try to make it hard.
Got it. Good points on the technicals on that triangle here, guys. We got to keep flashing through the sectors, though, Matty. What else you got in terms of sectors?
Let's take a look at the real estate sector very quickly. If you're taking a look at the quality of technical patterns out there in the marketplace, I like what I'm seeing in technology with the flag high base analysis with the clean trigger above 144. I really like that pattern. You're seeing some other patterns like a potential breakout in healthcare here as well. But out of the pullbacks that we're seeing in the marketplace, most of them are getting destroyed. Quite frankly, staples, the pullback in staples is getting slaughtered right now. Obviously, we'll take a look at the cyclical areas in a second. Those pullbacks are getting beat up pretty aggressively. But when you're looking at pullback analysis, the one that's happening in the number one sector in the market is actually number one sector as ranked by Tackle Trading right now is XLRE. And you have a very clean pattern here. And I do want to take a little bit of a moment just to kind of look at this one because I find it to be fairly clean. First and foremost, the upward movements, otherwise known as waves, have been very consistent in real estate. The downward drifts, although choppy here, got gobbled up and obviously broke out and ran, establishing that higher high, which maintained the consistency of the previous movement. And so you have a very consistent trend. And then you have this pullback here, 3-4 day pullback, slowing momentum. What are we seeing from an intraday perspective? Double bottom, double top, following a 2-day drift to the bottom side. You got to like that. And so even though you're seeing price depreciation in real estate, I don't think you're going to be looking at downgrades because of the strength and the quality of the technical pattern here. Frank, what's your read on the bull flag here that we're seeing in real estate?
Yeah, I mean, I would 100% agree with that. This is one that you don't upgrade because it's down on the week, but you like it more this week than last week, right?
100%.
On the pullback. Still need to confirm. Still haven't done that yet. But we're starting, as Maddie said, we're starting to set up that double bottom. We need to break some resistance. Today's high, yesterday's high, they're going to line up pretty nicely on that hourly chart for a double bottom potentially. So yeah, this is definitely a place that has caught my attention going into early next week.
It's good looking retracement.
Yeah. And when you're looking, and again, I'm just taking a quick peek at some of the highest market cap companies in this space here. Let's take a look. I do think you'll have your pick of the litter. From a technical, you do have choices here. You have strength in this area of the market that you're having in PSA. PSA, high base, kissed off the 9, breakout here today with confirmation. Retrigger above 300 looks like a continuation trigger, fairly simple. So you do have strength here that you could momentum look at from a trading perspective. But then you have your pullbacks too, like you're having in PLD, nice little bullish retracement sitting right there on the rising 20 with momentum in trend. You also have DLR there, looks a little bit more volatile of a bullish retracement. You do have momentum in trend, and you probably like the support level at 155 a little bit more on DLR than you do on PLD, but you have your choices here. And I do think that's fairly important. So you're looking at a little bit of a pullback in the sector itself, but not all pullbacks are concerning. Would you agree, Frank? Some pullbacks you're like, wow,
they're orderly. Yeah, right. They're orderly. They make sense, and it's really where they haven't blown up trend lines and old support levels, right? And that's certainly not what we're seeing here. That's why you like this as a retracement, an area for retracements.
Well, and typically we don't look at real estate for swing trade analysis. Typically,
generally you're
because
not.
We typically don't see momentum-based trends in real estate. But once again, 2021 is a little bit of a different year. We're seeing the number one area of the market with momentum, and that is real estate. So as a technician, I can't just shut my eyes to that. I like what I'm seeing in real estate. I like the cleanliness of the pullback here. I like the stability, especially over the last 2 days. Remember, coming back to the S&P, let's look at what's happening in the S&P over the last 2 days. A lot of volatile chop in the S&P over the last 2 days. Look at that volatile chop over the last 2 days. Well, let's come back to real estate here. Stability.
A little more mellow.
Double bottom, double top, reclaim. It looks pretty normal price action there. You gotta appreciate that in the real estate. And then the last one from a sector technical perspective would be the healthcare space. In terms of the defensive nature of the market, you're looking at a breakout very similar to technology, actually.
Yep.
You're looking at a breakout this week, consolidation underneath the breakout channel, very similar to technology. You're looking at that retrigger of 144, the continuation to see the momentum there. Here on healthcare, you're looking at 125.5, 125.66, looking at that reclaiming that level. Obviously, a gap down in healthcare today, but that gap down did not violate a support level.
Yeah, and bought up pretty nicely off those lows. You know, you have to go in on the intraday, right?
You got to hover in there.
You got to zoom in a little bit.
You got to zoom in there. But once again, talking about pullbacks in real estate and it being very clean, the areas of the market that are concerning here are the cyclical areas. You're looking at industrial, that violated the 50-day. You can't shut your eyes to that. That violated the 50-day moving average. It's rolled over every moving average. You have increasing volume, increasing volatility. It's a concerning area of the market. Yes, it has a what could be a significant support level. But again, at this point, it's only $100 and nothing else.
Mm-hmm.
And so I'm not exactly going to be, oh man, it's at a significant whole number. Let's see that first.
Yeah,
let's see that first. Most likely, this is unwinding. You should see continued decreasing price action until we find a real support level here. A little bit concerning. And the question I have for Frankie is, how concerned do you get technically when you see a violation of the 50-day moving average like we saw yesterday in the industrial space?
You're always going to get a downgrade for a pretty good one, right? Because the 50 should prop you up. That's giving you a deep pullback, right? That's giving folks an opportunity to take profits. And while nobody loves that deep of a pullback, or at least I don't, makes sense. Then that gives out. No, all of a sudden, and you saw the way that we behaved. It's not just that we gave out, but I mean, you saw it in finance, you saw it in materials, you saw it in industrials. When that gives out, there's a certain school of thought that, you trade with the 50, right? Where you're a buyer above it, you're a seller below it. And while I think that might be a little oversimplifying it, I do not fundamentally disagree with the ideas behind it. So taking out these 50s, now they're testing those 20 weekly moving averages, or very close. Those three in particular are all kind of right in that ballpark. I'm interested to see how that holds up for him. Historically speaking, the first test of the 20 weekly is a pretty good test, right? But I think what that leads to is, well, we get a little stabilization in the next, week or two, because buyers are willing to come in off of that price. If they go all in, they're doing it without me, right? They're doing it out with me.
And that's a wonderful point here, Frankie, because when you're looking at the 20 weekly, yeah, it did find support there the last two times, and it did historically become a wonderful trending environment. But are you really, really willing to take the risk on that?
You don't have to be the person that buys the first day, right?
Because what became, in the last time it hit the 20, yeah, you would have missed out on a little price appreciation to 90. But once it broke 90, that's where the real fun began.
Well, yeah,
you can be patient here is my only point.
Yep, 100% agree.
Have to buy the 20 dip. It can be that opportunity, but again, that opportunity got real easy and real clean once it reestablished that as a support level and then started seeing strength to the breakout.
Exactly, because the thing about the pullback to that 20 weekly is, to get there, you've got to have some short-term volatility and weakness, right? And so it's you don't need to be the first one, and you can be. I'm not going to be. You could do what you want, but you'll get, if it is going to hold, we should get plenty of opportunities. Like I said, it wasn't just the breakout. I mean, it was the extension beyond it, right? And so I'm willing to pay for that, pretty much always, certainly right now.
Sure.
Well, and I just don't see rotation models getting gobbled up after what transpired this week.
It's
No,
not
I
short-term
wouldn't
fast
expect it to be.
analysis to do that. No.
No. Give us a couple inside candles. Let's stabilize there. Or hey, if we get the big green bar like we did last time, then we'll have a little different conversation next week, right?
That's right.
But right now, I think you're looking to see how that holds, see if we can get that stabilization. I don't think right now you're looking to be a buyer in these areas. Maybe you're starting to get your list, like I'm sure Mark is. Ooh, this goes down a little bit more. I don't think it's a bad idea to start working on your shopping list, but I wouldn't, pull out the credit card just yet.
No, I'm with you there. I got this as a short-term reversal formation. I got it as a double top, double bottom with a potential violation on the M formation. Technically, I got this as an M formation. Those typically do lead to a little bit of short-term downtrend before that weekly chart gets real sexy. And so I think we need time here on industrials.
I 100% agree. I 100% agree.
Yeah.
Well, and honestly, not a lot is going to be added to that analysis when you talk about the other specific two areas of the cyclical areas, and that would be materials, XLB. You're seeing rotation come out fairly aggressively in materials, and unlike unlike industrials, which is more just cyclical, getting tied up into the cyclical environment, you're talking about major news coming out in material space. And that's not just the unwinding of the cyclical trade, or otherwise what the market is referring to as the reflationary trade right now. It's also the Chinese news of increasing liquidity in the metals market. That's having an impact. You also had news coming out from other countries. They're starting to target specific inflation in the metals community as well. You're seeing metals just getting pretty beat up here, and so you're looking at a fairly sizable downgrade in materials, but I don't really have a lot to add other than what we have already talked about with industrials.
Yeah, I would agree. Finance and materials, industrials, you can say the same thing technically, I believe.
Yeah, I agree. It's just materials has that double whammy that
it has
quite
a double,
frankly industrials doesn't have, right? But it's the same degree of analysis. And then finance, very similar. You're seeing the unwinding. Where does this find support? That's what we're really looking at on industrials, finance, and materials right now. Once again, they're kind of a downgrade. Stay away right now until they find support. And those support levels will be dependent. Obviously, we're going to be living on daily charts as they start to form, but where you're really looking is on those weekly charts. Right now, you got finance in a bullish retracement on the weekly chart. That could come down more. Give it some time. The only sector in the cyclical areas that has showed some degree of stability, it's got caught up in the selling as well.
A little bit. Yep.
But certainly is held up in the face of what is happening in materials, industrial, and finance a little better. We only really have one big down day here, guys. What's your read on energy? I think this is an overshoot tied to cyclical. I still see strength here, though.
Yeah,
it's well. Yeah, go ahead, Frank.
I would agree. It's somewhere in the middle, right? It's somewhere. I trusted a lot more the materials, but a lot less than tech. So I think for me, that's where it is. I still think we can look for opportunities in this area. I think, I do think, at least mentally speaking, we're downgrading it a little bit. Personally, I will at least, mentally be downgrading it, but we are still holding the overall trend, right? So I think we might need a little bit of time here too, but I don't think we're necessarily going to need the same amount of time that we would need in those other areas of the market. Just a little consolidation next week, a little pullback, up Monday, Tuesday, down Wednesday, break that resistance on Thursday. I could see trades develop in this area. I do think it's not an early week area. I didn't find anything. I feel like, this is a Monday morning trade for me, maybe you would like to do. So I do think that we do need a little time, but I don't think this is contingent upon the same things that the other areas are in this space.
And I love how you said that, a Monday morning trade, right? there could be there will be Monday morning trades in technology.
There could very well be. Yeah.
There could be in real estate, in healthcare, in utilities, almost any sector we talked about outside the actual cyclical areas. Industrials, materials, and finance, they need time. Full stop.
Yep.
They need time.
Agreed.
Energy, I'm with you, Frankie. It's not Monday, but it could be later next week.
It could be a second half of the week.
The
Yeah.
charts, and let me just give you just one example of that. The charts in this space don't look good right now. Like they don't look technically
Right. They're not standing out like,
consistent.
Ooh, that's great. Right.
Right. But you take a stock like Devon, right? Yeah. Nasty, getting a little better, right?
Yep.
Nasty, getting a little better. Well, you're in the rise of that rising 20 and the 50. You're hovering in a support level that is historically defined. You look at that on a weekly chart and you see it holding that, or not holding, but it's going to be testing that 200 weekly there as well. You start to get slowing momentum on Monday. You start to get a little upward drift on Tuesday. You see another, it's midday Wednesday. Hump day is going to do nothing. Thursday, we get that upward movement in price. I'm just saying, if the analysis plays out of support forming early next week, you could have some action in the energy space coming into the later half of next week. And so, whereas I do feel, Frankie, I'm right there with you in the other areas of the market that are concerning, like materials, finance, and industrial, I just think that when you see rotation, those things take time.
Yep.
They just do. Here, I think energy could stabilize, and a lot of that is on the backs of the strength in crude.
Yes.
Right? Industrials doesn't have that. It doesn't have the strength.
No, it doesn't.
Crude,
It can't. Yes,
right?
it can't. Yeah, can't piggyback
Right?
on old crude. Yeah.
No. And you take a look at crude here, guys. Man, what do you say negative here? Even in an area of the market that's getting destroyed, crude had a one-day sell-off and found intraday support. Like,
Yep. And
if that's
every
not
argument,
a sign of strength, I don't know what is.
and every theme and argument behind crude is pointing to bullishness right now on the demand side, on the supply side, on all kinds of them.
Until OPEC and Russia start opening up those pipelines.
And they will, you know, that when they'll at some point start selling a lot more product.
But
and they'll
even if they start doing that, we're still talking about increasing global demand.
Yeah, I agree. Yeah.
So
look at the economic forecast out of the Fed this week as 7% this year on their GDP projections.
Look at the inflationary increase out of the Fed this week.
Yeah, it's a good point.
Neither one of those are negative towards crude long term. So yeah, energy is going to hold up, and especially if crude finds support, that energy chart could stabilize pretty quickly.
Yeah,
Gotcha.
so definitely be a place to be interested a little later in the week.
And Tim, I wanted to do a deep dive on the sectors this week. Definitely check out the newsletter for complete analysis. But on a week where I'm seeing some rotation, I'm going to spend some time talking about the sectors. So hopefully the community got a little bit from that.
I think it's important, and obviously it's going to be kind of a preview for us internally, because we're going to be talking about this, within our coaching meeting here in just a few hours, getting ready for those weekend reports, and we'll have updates on all of our sector rankings for you guys over there at TAC.
We could have done the same thing other news media was doing today. Lord Almighty.
Talk about stuff that's not market relevant. Yeah, not gonna happen. Let's flash through some of the commodity market.
Very quickly though, Frankie, can one of you two take over the chart? I have to run.
Yeah, no problem. Cody,
Yep.
you grab.
I'm ready to go.
Very quickly, Tackle Trading, love you. Have an absolutely great weekend. Get excited for Trading Labs. Definitely check out the reports, guys. I know Frank's got some charts. I know I got some charts. Tackle's going to bring the charts for you guys. We're going to find the best ones for you guys, even in this volatile market. We're going to look at every stock in the market today, guys. Get excited for that.
Yep, absolutely looking forward to it, and appreciate the analysis there, Maddie. Let's go to Cody here, and let's.
Mr. Tan Man, I need a co-host, unless you want me to steal a host from you entirely.
Either
there
way,
you go.
Either way, sir, we'll get you up and running. Cody used to produce this, show, obviously. So, Cody, whatever you got to do to be able to grab that screen share and pop it up, I'm good with that.
Let's see, Tanya, are you there? If not, I'll just go ahead and grab the host from Tanya and give it back to him afterwards.
The magic on the back end, Frankie. It is.
Yeah, good thing it's them and not me.
Yeah,
well, that's all.
He got me. He got me. I didn't have to steal anything.
Here we go. All right, let's flash through the commodity market next here. Obviously, really good job breaking down equities and the sectors here today. We're seeing volatility in some of those sectors. We'll be updating those rankings. We talked crude oil here, Frank. It's a beautiful looking, chart in that regard. Anything you wanted to add to crude?
No, I think if you're looking at the way we behaved, I don't think there's anything to take you off of what seems to be the general philosophy is that crude's going to work its way to 75 and test that old zone. I don't think this chart has done anything. If that's where your head was, I don't think this chart has done anything to keep you from that, maybe except giving you a pullback opportunity if you thought that, but hadn't had an opportunity to get in just yet.
Yeah, it looks like it's just a continuation of his bullish trend in general. Gold, Frank, you and I were in a Zoom meeting yesterday at the end of the day, and gold was one of the conversations that you and I had. And I basically said, Frank, is there anything in gold that we can point to besides, longer term potential analysis that's going to take some time to develop? It's pretty ugly, right? And you said it absolutely is. What's your read on gold?
It's hideous. It's a nasty chart. We're testing, I think, an interesting support level, though. If you go back into December, we tested this support level, right? We tested it again in February. We broke down, after failing that test. We used it as some resistance. That was kind of the breakout, right? That really kind of gave us some signals to start getting in on this most recent run. So price-wise, I think this is a really interesting location, personally. Trade-wise, I don't think there's anything we can do about it today, at least from a trading perspective. We need to see it stabilize. If this gives out, I mean, why aren't we expecting more movement to the downside? Now, I hope this holds up, maybe speak the book a little bit, but I don't think there's anything we can dive in at this point. But I do think that this zone of support that we're testing right now is worth keeping an eye on as we're moving forward.
I think this is a great example of what we talked about at the very beginning of the show of we all ask for a pullback until we get one. If you've always been looking to add gold, I mean, if we hold down here at these levels, I think this is the opportunity you've been waiting for.
It's definitely the first one that we've had since we bottomed, right? Yeah, we've not had here. We've had the more trading style.
Hold on, I'll push back
right, the run
a little bit. I mean, if you wanted to buy gold, you're going to buy gold as an investor at any point in the last 2 years,
Absolutely.
regardless of price. So it's not really about short-term technicals. If you're a longer-term investor around gold, obviously you want them to always line up, Frankie. There's no doubt about it. But it depends on the intent and the purpose behind what you're doing with gold. Trying to catch a falling knife here just because it's down is really
it's really dangerous
for me. Yeah.
No, I think what you want to do is identify the price. Hey, there's something here potentially. Let's see if something happens here, right? I 100% agree. I'll always agree. You're not the first one buying. You don't have the money, right? You're not moving the markets. I'm not moving the markets. I do think, however, it is a good exercise on, investment type of opportunities, that when you do see the selling, that you think about what your prices are, right? Not run off and buy them. Oh, we bounced here before, let's party. I don't think that's a good long-term philosophy by any stretch, but I do think it's a good practice to say, hey, these are places where I could potentially see myself being interested. So if something develops there, I'm ready, or at least I've thought through that exercise. So yeah, I agree with you, Tim. You don't run off and try to get in on that action by any means, but I don't think it's a bad idea to put your lines in the sand where, hey, I would be interested, so you can get thinking about those things. If this is an interesting place for you, well, I'm probably going to spend more time this weekend looking at gold stocks, if that's where my philosophy is.
It's a lesson on understanding the importance of watch lists. This is something that you watch list now, not purchased outright. You watch it and find, as Frank said, that line in the sand, that level that you want to see, that pattern you want to see, but watch listing it outright.
I love Foolish Passions comment in the chat here. Keyword: falling knife. Coaches, no.
Yeah, no one wants to be the guy saying, "Yep, I'm catching this falling knife." Because listen, even on the off chance I'm right, I'll still never hear the end of it. And I'm probably not if I'm trying to catch a falling knife, right? Yeah, that's a lesson you learn early in your trading career. I think don't catch the falling knife.
Yep. Next quick one here actually is going to be Bitcoin. We'll finish on the dollar. Give me the BTC chart if you can. And just continuation of the same messy kind of range back and forth. We didn't get all swept up into the bounce there earlier in the week. We were excited about it in anticipating something, Frank, but until you break resistance at 41,000, you don't break resistance. So here we are backfilling into the range. I know Coach Tyler doesn't mind a little bit of a backfill, but now this is 4 days in a row. What are you seeing in the chart here?
If we create a higher low, if we're able to establish some low next week, then we will have made that improvement, right? Then follow through that with the breakout. I think you could technically be excited if this is something that you've been interested, but that's two big ifs. We have to establish a higher low, in my opinion. We have to take out that resistance, as you said, at approximately 41,000. I've just been calling it 40 just to give it a nice round number, but we can see exactly, where it is, right? We saw where that downward movement came from. That would be the first reversal signal that I thought, okay, cool. I get it. I wouldn't have any objection to that from a technical point of view. You may or may not like Bitcoin, but replace that symbol with anything, right? And I'll always say that is okay. But we haven't held that support yet. We haven't, or at least haven't created that higher level of support yet. So that's what I would be watching for. See if we can do that, breaking out of that resistance. Beyond that, that would be giving us the characteristics of an upward trend again, right? Higher highs and higher lows. So I do think if you are interested in Bitcoin, it's not been a bad week for the development. We still have work to do, and it still might break down, right? It's still, it's K-trade style still analysis, I think, with Bitcoin here, where, clean signal one way or the other could give you the push to go. Right now, it's still up in the air, but I do think you'll like the slow development that you've seen if you are interested in this product.
Sure. I agree with that as well. And then the last one here, take a peek at the dollar, and obviously a big rally. Part of what's happening here with so many of these different moves in the market this week has been volatility following the Fed response. Triple bottom down there, Cody, and dollar strengthening. There's not a doubt about it in that chart. Cody, you're a Forex kid. What are you seeing here in the currency market?
So I actually did talk about this on the Forex report last weekend, how originally I was seeing a lot of bases in the Forex market, not only in US dollar, but in a lot of cross currencies. And then once I started kind of like into last week, I no longer saw it as like a low base. I saw it more as a rounding pattern leading to that Fed meeting. And this movement on the dollar, which I think is a little bit premature, in the fact that they simply said that they might raise interest rates sooner. So rather than being 2 years out, they might raise interest rates 1 year out, which to me, I think is still, it's like, all right, guys, we're talking about a movement in interest rates a year from now, and we get this type of reaction off it. I think it's a little bit premature. Overall, we have gotten above the 200 period moving average on the US dollar. But to me, I think this was just all short-term reaction, but I'm not seeing any real difference in the overall fundamentals of the US dollar and what's going on over at the Fed.
Yeah. Well, I mean, obviously you have to trust, the price action in the short term based on what you're seeing, or at least maybe not trust it. You have to respect it, I would say, Frank, regardless of whether you believe in the 2-3 year fundamentals of whether the dollar's rallying. It's a basket of currencies, that we're pricing it against. And if the relative view of it is that the Fed is going to raise rates before maybe Bank of Japan, stops their monetary support, which they came out today and said they're going to continue it, by the way, or the European Union or the ECB or whatever it may be, the dollar can have these short-term rallies. In the longer-term charts, though, still pretty ugly in my estimation. All right, let's move last into stock talk. Then we're going to do a quick round of Coach Frank's charts here today. Excited to see what you found there across the scanning there, Frankie. But I only got one stock I want to talk about before we do that, and that's Adobe, who reported earnings yesterday after the bell. The big software giant, obviously, major market leader in that regard. ADBE there, Cody, if you're looking. The D. That's right. Now, we'll get the technical response here in a minute, but basically the company came out, they had a beat in the beat. They had some really good, profitability and, in terms of their operational Q2, profit and net margins. The CEO came out and really liked what was happening with their digital media assets, as well as their core businesses around the PDF type users and whatnot. Adobe beating it's gapping out here at the high here. Frank, how do you read that chart?
Well, you like it, you like what you've seen, you like the reaction. I don't really know what you're supposed to do for a trade right now, other than wait for the next whatever, little drift back, little pullback flag, little high base. I mean, you can try to momentum, but that candle, while it doesn't show tremendous weakness, coming off the lows, it doesn't show insane bullishness either, right? So I think right now, I mean, how do you not respect what you're seeing? Right. Mm-hmm. But that doesn't mean, at least in my eyes, that there's a trading opportunity. Let it develop, as in the days to come. Maybe there will be, if this is something you're interested in.
Yeah, I agree with that.
Looks like a hard gap to chase, though.
I think so as well. All right, guys, that's it from the news here today. We're going to move into our last segment of the week, and that's going to be Coach Frank's Charts. We do it each and every Friday. Very popular thing within our community here at Tackle Trading. Frankie, what you got here today?
All right, let's see here. I got Cody here today, and I don't know if this is going to quite qualify for a Cody special or not, but I'm going to try it, Cody, and see what you think. And that is TV.
TV.
TV. So
TV, I would qualify. Sell me on it.
All right. So, well, I mean, clearly we had the big pop, nice consolidation, broke out early in the month, right? That was a big spike on that candle. Tried to consolidate for a few days, and develop that pattern. Ultimately, that gives up. We've now just drifted back, testing that old breakout point as support, seeing some nice price action here today. The buyers really stepping in off of the lows here today. Need a little upward movement. Sure, I think everyone would agree with that. But just a very simple, straightforward, bet, for lack of a term. If we say take out yesterday's high, stop loss below today's low, first target up into that previous resistance zone, and then we can talk about where we would go from there. One thing I really like about TV is they do have a fairly open window beyond this breakout point. I mean, there's not really anything until, and I don't exactly know where you would call it, but something probably between, $17.50 and $19, just depending on you. So there is a fairly open window. We don't have any dramatic resistance levels just waiting for us to have to fight if we do hold up here, or if we do ultimately break out of that most recent high.
I actually really do love this chart. So starting just with the weekly, the fact that we've now broken above the 200 weekly, with those next levels being far enough away, and honestly, like when it comes to what I would deem a breakout pullback, this is I would say pretty textbook. Like, I do love this. This would be a Cody special in my opinion. We have that clean breakout above that previous resistance level, a fade back into it, sitting at that resistance level now. Like, as you said, if we get a trigger above yesterday's high, or even if you want to be a little bit more conservative, above Wednesday's high, I think this is a really nice, clean, easy trade to get into. Target, the first, you said 1750. The first target I see is probably 16, and then above that I see 18.
Okay. Yeah. And so there's some wiggle room in there, right? I would say, I think it's 18 that's really the scare. I think if we can take out that recent high, then 18 is on the table at least. But most importantly, there's some wiggle room, right? There's clear enough air for really almost any eyes, I would say.
Absolutely.
So, Tim, anything you would add to that? Anything you're seeing that we're missing?
No, in general, I like patterns like this, the old breakout retracement type thing. I don't know if this is a Cody special, like you're saying. I'm still trying to figure out the detail of what a Cody special is.
It's Cody. Cody, listen, Cody gets to say what's a Cody special, right? It's a Cody special. All
right. Fair enough.
That breakout pullback, it broke out, it pulled back into the breakout point.
We spend a lot of times when you're not around arguing semantics of what a Cody special is.
We do, Cody. Yeah,
way too much, Cody. So, even when you're not with us, you're with us, my friend.
It's not you, it's us.
It is.
That's right.
It is.
All right, what you got next there,
Frankie? All right, Tim, how about a little pullback here on Academy Sports, ASO?
ASO. All right, interesting. What day was that earnings? Let me see what day was the price response on earnings, Cody. That usually does grab my attention.
I think it was the 8th.
Okay, so that was the day where you have that long lower tail on that red candle, from what I'm looking at there.
Yep.
Took off, positive price response on earnings, took it to a new high. We're seeing volatility with the market here this week. Academy Sports and Outdoors bringing it back down into the moving averages. Pretty big red candle, which would be the one thing to kind of throw any kind of, kind of quibbling in there. But I do in general like the spot, the pattern, and it looks like a nice trigger above this little 3 candle intraday range. You could probably find something on the intraday to kind of map a trade-off with pretty nicely. So I see the pattern. I think it's qualified. It just comes down to mapping out the detail.
So yeah, I think so too. And I think, with the 3 bars that we kind of started to see those lower highs each day, but they're getting a little closer to one another, right? So I do like the 3 bars. I'm with you. I would rather the candle that got the whole party started be a little more mellow, but at the same time, the big candle being first, I think, is better than the big candle being in the middle. if I had to, rate my big candles, it makes sense that it starts at the top. So I do like the fact that we're trying to stabilize. We've got a great trend, right? I mean, these guys have been trending up since their IPO, been around for, close to a year now. I don't think quite that long. Just been a really good trending stock. Definitely caught my attention in a week where trending stocks are, maybe you're not seeing as many because some of them have been blown up, right?
Correct. In fact, I think you'll see a lot of different kinds of patterns this week on the options report and stock reports, Frankie, because we're not just looking at high bases and retracements, because momentum in the markets have shifted, right?
Exactly. And to illustrate that point, I'll give you two more here. One is Edward Life Sciences, EW.
Okay.
These guys, much like the healthcare space knocking on the door, they've got this nice consolidation period after breaking out. So what I like about these guys is they broke out, in my opinion, at least on the 10th. That was your breakout day. We've taken out that resistance, and they've really just done nothing wrong. So had I traded this breakout, if I'm in on this old breakout, I'm perfectly happy with the development here. If I'm not, and I thought after that first day, well, I missed it. They went up too much. How many times have we probably all said that, right? This consolidation over the last several candles has created a new opportunity, I believe, for us to get in. My original target on the original breakout was up there just north of 107 personally. And with this consolidation over the last week, using above the highs to get in, below the base as a stop loss, still presents a 2-to-1 risk to reward ratio on a stock that I feel has the target potential in an area of the market that's definitely holding up, right? In many ways, looks very, very similar to XLV, the healthcare sector ETF, just a clean little high base breakout here.
Cody, what do you think of this one? Because I really love the tight consolidation up at the high. I'm 100% a yes on this.
Yeah,
Frankie. I love those 5 candles coming back into the 9 here. So
I'm definitely yes as well, and I love the tight consolidation. I also love the fact that the bottom of this base is right at $100, which could be a really strong level for a lot of stocks, and it's really bouncing between $100 and 101 or 150. I think that makes this, and if we were to go intraday on this, I think the entry is so clean and obvious that when we break out of this range, it's go time.
I'm with
I
you.
really like this chart. Yeah.
So, Mark, I saw you were here. Anything you would like to add to Edward Life Sciences there?
Mark popped in right as you started your charts. Like it's almost like he timed it perfectly.
It's not a coincidence. Frank, listen, Frank makes me money because Frank does great analysis. I can piggyback off the work. That's a beautiful chart.
Hard to not like what you're seeing there. But on the other side of it, while there's a nice clean high base at the top, you're seeing lots of reversals. And one I wanted to talk about, and I'm not sure where people's heads are going to be on this, is TDOC.
I got to tell you, I'm glad you're bringing this one up because part of my brain right now is going to be looking into some of the ARC innovation type funds. We'll get to TDOC in a second, but I want to highlight something here, Cody, on the weakness and the volatility in the market we've seen in the cyclical areas. And Coach Matt, Frank, and Cody did a great job breaking those down, those sectors earlier. Look at ARKK, then come back to TDOC. And some of these other kind of innovation type stocks, the Cathie Wood type stocks, they've all actually had a pretty decent week. They're actually pushing for a new high this week and strength on yesterday's candle as well as strength here today. So there's relative strength in this type of company here with TDOC. TDOC, a component of the ARC Innovation Fund, one of Cathie Wood's, I think, top 10 holdings in that fund. So I'm already interested from a theme perspective, and I see the reversal coming up. What are you seeing detail-wise in that pattern, though, Frank?
Well, I'm liking, obviously we bought them. We started to roll back up, right? We're fighting at that 50-day moving average. We've reclaimed those short-term averages. They're moving the right way. We're also having this fight right on the 9 weekly, which, as Mark will attest, is a tough battle, or at least certainly can be. So what I like about TDOC here is they're still fairly early, which goes both ways, right? They've not established as much momentum, but there is more hypothetical, at least upside to them. I like the fact that if we take out that 50, we're breaking resistance, we're breaking the 50, we're breaking the 9 weekly. We have a fairly clean path into the first. There's a legit challenge, I would say, at approximately 170. I think that is, we've seen some support bounces there, some breakdowns there. So I think the big question for me would be, am I comfortable with risk to reward using that as a target one? And I think that would probably come down to the trader and how they like to manage their stop losses. And I would understand either way, probably. The real goodies, if this is the reversal, if we do break through that resistance and those moving averages and can win that battle of 170, then I mean, there's lots of upside, lots of room for us to go, right? There will be lots of fights, right? You win that fight, we've got something about 190, then we have the 200 at 200, then we've got a lot of old history at 230, 235. So it'll be battle after battle, but there's little windows and pockets I'm seeing. We win one fight, we've got a little room to the next one. We maybe lose that fight and it's over, but if we win that fight, we got a little room to the next one, and so on and so forth. So while this is just one, and there are definitely others, so if TDOC is not your thing, there are plenty of reversal types that look like that, this out in the market. Definitely an area that's caught my attention, and a technical pattern that I always really, really like.
I don't know if it's going to be TDOC that makes our end report. I know we'll have a conversation about it, but I do believe there will be components in these type of companies with reversal characteristics that we're going to be watching for as coaches, because you're right. Patterns change at the top. You start looking across the market, you find what where the opportunities are. So good. I like this one here, TDOC, for sure. What you got last? Here,
okay. Give me one more, huh?
Yeah.
All right.
One more.
See, you always do it too late. I wanted to bring up Bumble because they're their own little mini version of Teladoc.
You got two more you love?
Okay, yeah. I just want one. Won't take a lot of talking. Bumble BMBL, and we don't have to talk tremendously about these characters. They might be more of a Mark one. I don't know what Mark's thoughts on Bumble are, but similar reversal type of characteristics. Working into that falling 50, another area that you're seeing a lot in the software type of companies. You're seeing a lot of things in some regards of this pattern right now. And so, this was less detail and more just to kind of illustrate that there's a lot of these reversal-y types out there available to us right now. GBOX, another package software that are ahead of the game a little bit. Will be the last one, I guess, if you're only going to give me one more. I see how you are. Tim has to, because I would just keep going and going. And so I don't take it. I don't like it.
Don't take it personally.
I don't like it, but I don't take it personally.
Okay,
I know.
Good.
I don't. GBOX here again in the tech space, in the financial space, broke out of this $15 resistance level, both a high base and an old resistance level. A little bit of a clear path until we approach that next level of resistance. I like tech going into next week. I like it from a breakout perspective. These guys are a little bit ahead, and they broke out, and behind that they're not at their all-time highs. So I've definitely found a lot of interesting things in tech over this week and the last couple of weeks, and I expect that trend to at least short term continue. That's kind of where my head is going into the upcoming week.
Cody, what do you think of this one here?
I can see everything that Frank's saying. It may not be one that I would take on the initial move. I might actually. I'm really cautious when I see these type of breaks. Seeing the resistance, I can see where the next target level is, can be between 20 and 1950 or so. That you could definitely target up to that. The volume of this one, not crazy with the overall.
It's just a little
move.
stocky play. Yeah, this is just a little stock play. You're not going to try to do anything crazy with options on GBOX here, but they're low price. Not.
Yeah, if I were to trade this, it would be a stock play. Grab 100 shares and see what it does, and I'd probably also move my stop pretty aggressively on this one as well. I'd probably move it day by day underneath the previous day's low. So if I got triggered in, my main risk would just be that first day. If it continues to move, I just continue to inch up my stop.
So play it with a momentum type of style,
momentum
Cody,
style.
is the way you're thinking about it.
Yep.
Yeah. The only thing that I would need to wrap my head around is the volatility that happened in March and maybe early April there.
Yeah, and that was an earnings pop.
Dude.
Underbelly, and an earnings to boot there, Mark. Yeah, this is more underbelly, so I could see it not being a Cody type.
The whole underbelly was getting whacked when that was occurring. So.
Okay, I like the pattern where we are.
This is a pattern I have had a lot of success with in the underbelly, in going down the chain actually and selling naked puts at big credits. So I like taking the technical pattern that you directional traders use a lot, and then be like, I'm getting a bullish signal on a high volatility stock. I'm going to go down the chain, find a support level to sell above it. Had a lot of success this year.
Yeah,
with that.
makes sense. Yeah, I could see. I can get behind that from a cash flow perspective. That makes a lot of sense.
Makes sense to me as well. Frankie, fantastic again, as always. And I know that you've probably got about 50 to 60 more of those companies that we're going to be discussing here during the scattering report.
I get excited to talk about charts.
I love them too, man.
I love when we have captive audience to talk charts with. So always a pleasure.
100%. All right, guys, we're going to start wrapping up our show here. I see Mark has joined us. We'll get programming notes here in just a minute. Let's start with final thoughts, though. And Frank, you're up, man. You first. What final thoughts for the team here?
Yeah, I mean, as you're going into next week, do keep in mind that rotation that we're seeing. I don't think it's a bad idea to start creating your shopping list, but remember, you don't have to be the first one in, right? And we've not seen a lot of turnaround, and so go with where the strength is in the market. It's always going to be my philosophy. We'll see where this one takes us. I actually think as we're going into next week, some of those ETFs in those areas that are standing out make for some interesting potential trading candidates. Well, breakout on XLV, pullback on XLRE, things like that. Trade within your systems. Remember, we're in the summer. We see lots of back and forth, and we've definitely seen a spike in volatility, so adjust accordingly. But other than that, have a great weekend.
I agree. Cody, final thoughts from you.
My final thoughts is I'm looking forward to hearing what Frank's other 50 picks are, because I think I liked most of the ones he put out there. So I'm excited to see what those other 51 are.
Listen, I love going through it. There's a reason why we always ask Frank for his, watch list first. And there's no doubt about it. A lot of great charts in there. And that's what makes those reports hum the way that they do. Marky, programming note. I know you got a webinar here, for our Team Tackle members, pro members here in about an hour and 10 minutes. Kind of talk about that a little bit as well. But also final thoughts if you got any for the team.
I mean, listen, it's interesting market conditions. These are my favorite type of market conditions. These are I am not the best directional trader. I think I handle volatility situations on the way down. Patience, conservative, look for opportunities. I like what Frank said about, listen, you don't have to be the first one in, right? And as long as you're not over leveraged, as long as you do not have it full tilt, and I don't know why you would right now, a little bit of volatility should not matter at all. And then you look for opportunities. I like what Frank said about not being the first win. And I got a million other thoughts, but I'll share a lot of them over the weekend. When all you lazy people have fun weekends, I'm doing the Mind of a Trader at the Market Bell here in an hour and 10 minutes. And then the Sunday night prep class. I'm going to have a lot to discuss. I'm still digesting the Fed, in my opinion, and all of that, but lots to go over. But it doesn't matter what happens in the market as long as Tyler said something this week that I loved, where he says, listen, 90% of everything is just trade management. And I really do believe that. Patience, discipline, creating a good balanced portfolio, trade management, market can do whatever it does. So anyways, I obviously have a lot to say. I'll save a lot more of it for an hour and 10 minutes.
Events page at Tackle Trading. You could just bring up Tackle Trading if you'd like to there, Cody. That'd be a great place for us to kind of wrap up and give people direction on where to go next. The events page at Tackle Trading, you can always find any of the webinars we do for pro members, including the Friday at the closing bell end of the week event that so many people love there, Marky. You go to the Trade Center over on the very far right, and then you'll see the events calendar, and then you'll find links to the webinars that we're putting out there for our pro members. So if you're a pro member, do not miss it. Mark obviously loves putting that thing together. He's got a lot to say here this week, especially with everything that's going on. So make sure that you come and attend here in about 1 hour. Guys, we're out for the week. Have a safe, wonderful weekend. I know there's a huge heat wave, Frank, where we're here in the West. Salt Lake City hit a record high for the day yesterday, 108 degrees downtown, if you can believe that.
I can. It's been warm. It's been warm.
Really incredible what's going on. So be safe out there. If you're going to be outside, be safe. But we'll see everybody back Monday. And remember, we're enrolling for Trading Labs starting on Monday. Keep an eye out for an email coming from us here at the team over Monday as well. Have a wonderful week.